Well, good morning and hello to you and everybody who is tuning in. Welcome to our Monday morning market report where we dive into the Central Florida, Orlando, Florida real estate market and bring you the best and the latest. Well, how does that go? Greatest and the latest?
The latest and the greatest, right?
And coming back again by popular demand is not, the one and only Russ, my colleague, my friend, and where, we're going to dive into this. And just we have a wealth of information to share with you where, we're looking at this latest report that came out, which is diving deep into the trends, based on, and really giving us some really good information, Russ, like looking at where were we last year? Where are we now? And somewhat projecting into where we're heading.
Absolutely. Thank you, Joe. I really appreciate you for letting me come on here, and yes, it is always a pleasure to get a chance to start my week with you, and it's a great beginning. Um, I'm really excited. There's, as you said, we're in a transition time period, and um, every week there's obviously some valuable information, but I think if you look at where we are today versus where we were a year ago,
Yeah,
it's eye-opening, and I think that's something, not only how it affects investment real estate, but
yeah,
real estate in general and the economy as a whole.
yeah.
So I'm looking forward to getting into it today.
Oh well, that's say no more, Russ. Let's dive into this. So let's start by, beginning at this, this report. It compares market trends from the month
Hmm.
of May 2023. So this past month into the month of June. So this, just looking at the
Correct.
1 month differential. And in May,
Hmm.
we saw prices continue to rise, and and homes spending less time on the market. What can you
Right.
tell us about the current state of the market right now? Where are we, and what are we seeing?
Okay. Well, Joe, right now we're going mid. We've just finished our first half of the year. Um, One of the things that there's some really interesting viewpoints, or very interesting stats that are coming out right now, mainly in regard to demand of housing. What we've seen is, we just got done going through a time period of very slow growth,
Yes.
and there's many factors that have contributed to that, but we're going through a time period of very slow growth, and we started to see things start to progress in the right direction, and then summer came and things slowed down again. And
Yeah.
I think the stats are going to be able to point that out, especially when we start looking in terms of where interest rates were and where interest rates have played a role, and versus how it has affected the market and how are we coming out of that. So I think we'll see a lot of that when we talk about the individual stats.
Yeah, and that's really good to know, Russ, that we are starting to see an uptick. Let's
Yes.
let's dive more into the numbers. So in
Hmm.
May, the medium home price was around what 378,
Hmm.
378,000, and
Right.
that was, just
For the
looking at
Orlando
that
area,
month
correct. Hmm.
as a what?
For the Orlando area, just
Yes,
to point out that we are talking about the Orlando area.
yeah,
I
yeah.
forgot to mention it earlier, so I was just gonna say that.
So so we're looking, so 378 in May,
Hmm. Hmm.
but up 10K from April, right? So
Right.
no, I'm sorry, I'm getting my numbers. We got a lot of numbers we're looking at here, so let me
Right.
let me restate that again. So
Okay.
in May, the medium home price was recorded at 378,000.
Correct.
And in May, it was 370. So we're seeing this increase, and comparing, going back a little further than that, in January,
Hmm.
we're seeing about a $28,000 increase in value.
Hmm. Correct.
How do these numbers compare? If we're looking at 12 months ago, May
Right.
2022, where were we?
So Really great question. So if we look at the last year, since basically the starting of January of 2022, not this January, but the year before that, when the Fed started increasing interest rates in order to slow down the economy, what we saw immediately was the housing market had definitely peaked, and there was a dip. There was a slowdown in everything, slowdown. And Orlando, Florida was not hit as bad as a lot of other places in the United States. But when you really look at the numbers, what you saw, so even in May of 2022, a year ago from where we are today, at the end of May 2022, what we saw versus where we are today in our median home prices is that we're basically are back to where we were in May of 2022. So we started to drop. We dropped significantly at the end of 2022, significantly at the beginning of 2023, and now we're starting to see ourselves creeping higher again to the point where now, interestingly enough, we're back to the point where we were in May of 2022 in terms of median home prices.
Wow.
Pretty interesting. Most people wouldn't realize that.
Yeah, I mean, and so much has happened in just that short period of time, and that's really interesting. So, what about the overall sales then? Are we seeing any significant change in that as well?
Well, again, another thing that's interesting is that we've seen that the sales have risen from April to May. So, I mean, that's a little bit of a very much of a micro time period. April to May, they rose 13.9%. And May compared to, so then going into May of 2023 versus May of 2022. So we saw April to May, an increase of 13%. What we saw from May 2022 to May 2023 was an actual drop of 20.2%. So what we're hearing, step number 2, when we talk about sales, what we're hearing is that the market is recovering, but we're nowhere near the sales that we were in the 2022 area. However, our median home prices are starting to recover back to where we were. So, lots of signs of good news coming right now, and it's showing up that it's definitely trying to fight its way out of the hole.
Yeah. So, Russ, what I'm hearing is, we're seeing a month-to-month interest, but if we're taking that over comparing yearly, we're seeing a loss there, a decrease in sales.
Yeah.
So month to month increase, but a year-over-year decrease in sales. That's really interesting, and I think it's important to distinguish that as we're conversing, especially looking at these numbers. Now, let's look at another metric, and we're talking about inventories. How do inventories compare?
I think inventory tells us the whole picture, really. Inventory gets a little confusing for people because they don't really understand what inventory means. But inventory just means the amount of houses that are on the market available to sell. Okay, so inventory is what in economics term we call supply and demand. Demand being the amount of people buying, supply being the amount of things to buy. Well, the supply, we measure supply in the real estate market on inventory of houses ready to be bought. Okay, so inventory, I think, points out the real picture of what's going on. So if you look at the inventory between, say, April and May, the difference between the inventory in April and May, it's too micro, but it really shows no change. So no net change. Where the real interesting data comes in is May 2022 versus the inventory of May 2023. We saw the inventory increase by 33.7%. I'm going to say that again. 1/3. 33.7% is how much the inventory has increased versus where we were in May 2022 to May 2023. That's a huge increase in supply. So if you take that into account, let's step back. Some of the things we just talked about, right? We just got done talking about how the median home prices have gone back to where they were last year, how the the sales have gone are still lower, and our inventory is higher, yet we're recovering. So with all of those things, all those headwinds, and the market still is recovering, that's a good sign.
That's a good sign.
That's a good sign. So think of it like a river and trying to hold back the stream of the river. That river's still going to pour ahead, no matter what tries to push it back. And so what we're seeing is that we're seeing that the market, even though all of these factors have tried to hold it back, it's starting to rush back through and push through all those barriers. And and even though it's pushing through all those barriers, we've gotten back to where we are a year from now. That's got to say a lot of good signs.
Yeah, that's a really good sign. It's a notable jump. And I do want to say, excuse me to our listeners. We got someone cutting the grass on this Monday morning. I think, this early in the morning, it should be a sin to do that. It should be allowed.
That's
So
right.
if the noise is being picked up here, I do apologize.
I don't hear it on my side.
Yeah, okay. But no, like Russ, I mean that's a really notable jump. You said 33% of the increase in
Increase in
inventory.
supply. Mm-hmm.
So here's another metric: interest rates. And I know that this is probably something that a lot of our investor clients and those wanting to get into real estate for the first time, maybe purchasing your primary home, it's the big factor in determining the cost of that investment.
Yes.
How has that have an impact in the market?
Interest rates are a massive driving factor to the economy. I remember back in the time period of the 2000, or actually even going back to 2012, 2011, when changes in interest rates, even a simple 0.5% interest rate would potentially cause a significant drop in the stock market. So 0.5%, that's 0.5%. So just think about that for perspective. And just as of back in going to January and a little bit before January of 2022, we were at a time period where interest rates were hovering around 3%. So we've gone from that area to where we are today. Current interest rates are running at about went from April of 6.4% to May of 6.6%. Okay, doubled within this time period. Doubled. I mean, yeah. That's a huge impact on the economy. Yeah. Now, just to put it in again in one more step of perspective, I want to go from May 2022 to May 2023. It increased from 5.3% to 6.6% in May 2023. So 5.3% in May 2022 to 6.6% in May 2023. That's a 25% increase in the interest rate. That is a massive decrease in money supply to our economy, which decreasing money supply means that you're basically taking all of the heat out of the economy. And it definitely creates a slowdown. It was able to reduce some of our inflationary pressures that we were feeling, seeing eggs and gas and everything else go up in price, including home values going up in price. So it's definitely slowed that down. But again, we just got done talking about how median home prices are back to where they are, even with all of these factors pulling it down. So I would have to say that what we're seeing right now is that we've seen that the market stabilize, recover. Markets. A great thing about markets is markets they recover, they satisfy, they they fix themselves.
Right.
And it's a really interesting thing to see, and we're seeing that right now. Basically, we've seen a full recovery to where we are right now.
Yeah. And I know all this information is very helpful to those who are looking into engaging in this market, especially this local market. We're talking about Orlando, Florida. And, you know, as we're looking at this thing, so looking at interest rates and inventory and median home price, and we talk about the inventory, but let's talk about, you know, the type of properties which are being, you know, infused into the market. And some which may be of very high interest to investors are those distressed properties. So let's talk about that. Like, you know, are you seeing any changes there versus the, you know, the overall new listings which are being introduced into the market?
You know, it's interesting when we talk about distressed properties. Distressed properties means short sales, bank-owned properties. Those are typically what you would talk about when you're talking about foreclosed properties. And you would think that there'd be a lot of inventory, though. There'd be a lot of people in foreclosure that, you know, going through this tough economic time change, and we're really not seeing it. So what we've seen, and I think that again is another good sign, we've seen you know, distressed homes in the Orlando area. We saw that the change from, let's see, when we go to April to May, basically the amount of distressed homes that were sold were 18 in April and 21 in May for the entire Orlando metro area. That's not a huge number, and so, you know, that's good. That means that the supply of distressed properties are being purchased, which means that you know, that's recovery. And when you see a change from, you know, May of 2022 to May of 2023, we're really again not seeing a significant change from what we did from last year to this year. So that's a good sign, I would say, overall.
Yeah. No, and you know, my mind is going so many different places as we're looking at these numbers. And thank you, Russ, for, you know, just a few minutes that we've been able to digest. Just, you know, just looking at May to June and having some comparables, historical, going back to last year.
Yeah.
As we close, any last thoughts? You know, like this. So what? Like, as investors are looking into this, why should this matter, or what does this matter?
Well, people that are getting involved, investors right now trying to get involved in this, they should feel relieved. They should feel comforted. You know, nobody has a crystal ball and nobody can predict the future because, you know, hurricanes and tsunamis can happen. So, you know, pandemics can happen. Those are factors that are unpredictable. However, if everything remains the same, you know, they teach us this stuff in business classes, right? If everything were to remain the same, then these would be indicators to say that it looks like we're seeing a good recovery in the market. As long as they don't mess around with interest rates too much more. These are really good signs. And if anything, actually, an astute investor, a wise investor, somebody looking for an opportunity, this might be it.
Yeah. Wow. Well, Russ, thank you so much for, you know, just spending a part of your Monday morning with, you know, with me and sharing this information. And I just want to encourage, you know, to all of our viewers, you know, share this with someone who is, you know, also interested in this type of information, because we know that knowledge is key, knowledge is power, and be a steward. You know, don't be greedy with this information.
Yes,
Make
exactly.
sure that we're sharing it with others, because you know, truly, I think, you know, the real estate industry is the number one method, I believe, for achieving those generational wealth goals and dreams and setting up not only yourself, but you're talking about your children and children's children